was a question that various business leaders and decision makers addressed at the recent Africa Outlook 2016 conference hosted in Johannesburg, South Africa by leading investment and finance company Deloitte.
There's one country that is badly affected by the oil and gas price slump, that is Nigeria. But that is the country, quite honestly, I wouldn't write off that easily. Nigeria, yeah.
We'll talk about Nigeria.
And
bring it up.
when you go to Lagos these days and you speak with the Nigerians, the message you would get from the non-oil and gas people, obviously, is it's a blessing in disguise. We are back on our feet now. We were put back on our feet in a brutal way, and we can do. I mean, when you look at what Adesina, who's now the president of the African Development Bank, what he did in agriculture, I've seen numbers now that are suggesting that Nigeria is independent as far as food production and food agricultural production is concerned, which makes a huge difference. There's always the story around electricity and power and energy. Again, people are telling me there is some improvement happening. The banks will be struggling because of obviously the linkages to the oil companies that are not making that much money these days. But if and when the Buhari government finally really sort of gets its agenda fully together and starts perhaps letting the Naira go so we have a more market-determined exchange rate, again, with that domestic economy we have in Nigeria outside the oil and gas space, don't write them off. I think they are challenged, but they also have tremendous potential.
What is the IMF's policy advice? It is really manage vulnerabilities, fiscal vulnerabilities where they have built up. Exchange rate, if you're not in a peg situation, that is an appropriate buffer to deal with fluctuations in capital flows. But doing that, don't forget the social and development programs that you have, push forward with structural reforms to make sure that as you come out of the cyclical downturn, you get back on as high a path of growth as possible and as inclusive as possible.
Growth is going to be an issue. Foreign earnings are going to be an issue. There's going to be a lot of pressure on the fiscus of most governments. I think what will separate the relative successes would be the issue around competitiveness. Those countries that are able to provide very strong, appropriate policy environment that can enable businesses to thrive, that is predictable, that is transparent, that addresses issues around governance. And I think it's also very important for governments to now start being very proactive in opening up private sector participation in all the major sort of infrastructure, public infrastructure areas where, up until this point, as you know, most governments have always dominated that space. Thanks.
I think when we look at trade and you look at Africa, it's 10% of our trade. I think North America, it's 40%. In Europe, it's something like 60%. So I think if we want to stabilize our continent and we want to be ensure of stability going forward, I think this is the way forward. And I think I would really push for Africa to take growth, a sustainable growth, as an objective rather than just year-on-year growth. Thank you.